Hey everybody, it's Jack. I want to give you an update what's going on in the market, show you a couple things, give you a couple tips. Now, sometimes I like to give you these videos where we're looking at technical analysis, and sometimes you just see me giving you the tip. But it's important right now because this market is chaotic. It's important that we look more at some technicals that are going on. And not so much look at specific stocks, but think about these stocks as assets that you can apply a strategy to, because it's all going to be about strategy selection, not so much stock selection. But the strategy is going to depend on what the broad market's doing. That's why we got to look at what SPY is doing. This way we're always using a market-driven approach. Number one thing you always want to do, use a market-driven approach. Don't go against the trend. Now, it's down. It's still bearish. Anytime you got the market or an individual stock below all three trend points, it's bearish. And as you see here, ironically enough, it closed just below the short-term trend point. That's how accurate this is as a point of resistance. We had the crossover here again. We had this crossover back here and that one there, all to the downside. Now this part was an overreaction, right? That gap had to be filled in. But then it's going to bump up against this and trade lower. Now, it has not yet closed above the short-term trend point. That would be a really good sign if it could close above 540. But even then, the ceiling is short. This is a room, not much room, right? You got to be jammed in a little box. And we'll see. Once it comes up here, it's going to test this area. That'll be resistance. It'll come back down. After it tests resistance up here, if it comes back down here and finds support here, we're going to be in a whole different market condition. But right now, just because we had a couple up days doesn't mean we're out of the woods, right? Just take a look at the uptrend list from the previous session. Not many. 9 on the downside. 2. All right, very strange that we'd have more hitting the upside, higher highs within this crazy market condition. Today, same thing. Netflix. Some stuff is bullish, way more bullish than the broad market. Downtrend is kind of not as heavy as it was. That's going lower. That too. Nothing great on the upside, but the broad market is looking like it's going to struggle right at this point. And even if it closes above, again, even if it closes above 540, it's still going to find resistance in here. So it's got a ways to go before it gets back to a real buying market, which would be all three trend points in alignment, with the short term above the intermediate term above the long term. That's not what we have now. So what strategies work now, right? Talking about strategy selection versus stock selection. What's still working is covered calls have been great. Credit spreads. Credit spreads have been great. Iron condors. You're using a credit spread, a bull put spread below the market and a bear call spread above. That's been good. Bull put spreads have been good. Bull put spreads have been good because a lot of people that own the other side of the trade don't want to put it to you if they think it's going to go higher, right? Then they could sell it for more in the open market. This is why sometimes even if your put is in the money, you won't have the stock put to you. It's still a great strategy. Anything right now that can capitalize on selling premium, that's where you're going to be the most successful. That's what I love to do. Now, there's a few times when a directional, really short-term directional trade on a stock like Tesla will make sense with a debit spread. But for the most part, and there's some other times when a debit spread would be really good for a short-term trade because this volatile market can rip. But for the most part, it's the premium selling. That's where the money resides. Talk to you soon.